What is up, guys? Just a quick update on the stock market and sentiment in general, which had become extremely fearful. And usually when that happens, combined with some other factors that I will break down for you in this video, we are looking at potentially being close to a reversal sometime in the next 1 or 2 weeks, and then continue to the upside. So let's dive straight in. What we have here starting out for the stock market, we are back to extreme fear, where just a few weeks ago we were approaching the greed territory already. Okay, so we're back in extreme fear sentiment wise. Then what we're looking at here, this is important to keep an eye on, is the seasonality of the S&P 500, and you can see how this goes by trading days of the year. And indeed, the last 2 months or so, we have seen a bit of a pullback here, going right according to the seasonality of somewhere a low in early October, and then towards the last 3 months of the year. Again, it's not a guarantee, guys, but this is seasonality. It's averages based on past data. Okay, so if this repeats again, we could be looking at a low in the next 1 to 2 weeks or so that lines up with that extreme fear, and hopefully see a bounce here. Then what we have here also, the Dow Jones Industrial Futures, the lowest daily RSI since the crash in 2020. Okay, so you can see over there. So let me bring out the S&P 500 chart. You can see here, the blue is the 50 simple moving average, the red is the 200 simple moving average. And what we have here, quite simply, is we are still here bullish, in my opinion, based on a multitude of factors. Number one is here in this trend since October of 2022, we have been making higher highs and higher lows, higher highs, higher lows so far, right? So let's see, does this previous area over here become a support combined with the 200-day moving average, where we can flip and still take out the highs? That is still the liquidity target, in my opinion. Or do we break below there? If we do, we still have some other lines in the sand, namely the Fibonacci golden pocket around about this level to the 0.70. You can see that would not be unusual if we consider that this would then be a market structure break, right? This was a bearish trend, went above it, pull back to the Fibonacci golden pocket. Worst case, right, if we do see some more downside, and then continue to the upside. That is still my two scenarios that I'm looking for right now. Obviously, a break below here would be bad. If we breach that, then we're looking at probably a bunch more downside. So changing it to the weekly over here, what we can also see is this is obviously clearly still a bullish trend all the way for many years. You can see here it's been making higher highs, higher lows, with the exception here of the March 2020 crash. But other than that, you know, it's still making higher high, and it's still making a higher low here in 2022. Okay, so as long as that continues to be the case, the trend is bullish, and even though there's sideways periods and consolidations and pullbacks within that trend, the trend here on the higher time frame is still bullish. As long as we're above both the 200 and the 50, you can see anything above the 200 and the 50 is just really bullish. And it tends to be the case that you can see when it reclaimed the 50, it went to a new all-time high. Reclaimed the 50, went to a new all-time high. You can see that that has been the trend all the time over the past decade or so. So we have reclaimed the 50, and so far we're still above the 50. So it is still completely possible that we do hit a new all-time high. So this level of confluence over here, the previous high here, this could potentially be something with the 50-week moving average here too. And in case it does break down to there, well, then the next stop is usually the 200. As you can see, this was a bit of an exception with a crazy event here, but even that ended up holding. The 200 ends up holding. So worst case, if we break the 50, the 200 is likely the next stop. Also has the confluence with the Fib golden pocket. So this is kind of the last resort for the bulls. If we get here, it would probably be an optimal time to buy, because your invalidation is pretty clear. If it continues going, well, then we're looking at probably a lot lower, right? But if it holds here just like it has all these previous times over the past decade, then that gives you a maximum RR play with continuation to the upside. So if you see people being bearish on the markets, yes, there's a recession, and yes, all the economic data is bad, and yes, inflation is high, and interest rates are high, etc., etc., etc. But just follow the charts, and if you look at this, so far it is nothing different to what it has previously done. Every single time it is still above the 50-week moving average. So there's a good chance, you can see over here, that it simply just holds a support and bounces off the 50 as it does many times. And if that doesn't hold, well, we still have the 200 over here. So there is no reason, in my opinion, to be overly concerned or to be overly bearish at this point in time until we break this. If we break this, like I said, and we get a weekly close below the 200 and we get back below here, well, then we can probably consider that we could go a lot lower and maybe take out these lows, which I do think at some point will happen. But my preferred scenario at this point in time is either something like this or drop, still take out the highs, and then at some point, maybe a year down the road after they cut rates, I'd be looking for that crash somewhere like that. So that would be my preferred scenario. Hope you enjoyed this update. If you did, smash the like button, leave a comment down below with your thoughts, and I will see you in the next video.